Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So this is our second live stream out there, and can anybody hear me? Checking to the chat. Excellent. Well, thanks for joining, everybody. Welcome to Minting Coins, your source for Bitcoin and blockchain news, interviews, and ICO reviews. If you're new or not, hit that like button and leave your comments in the chat box below or to the side or wherever the chat box is. And yeah, just pop in those questions and those comments as you have them, and I'll be really interested in taking a peek at those and seeing what we can pull out of there, and what sort of information that we can share and questions we can answer, and so forth and so on. In this live stream, we're going to be going over some really cool information. We're going to be talking about Bitcoin. We're going to be talking about Bitcoin futures. We're going to be talking about what this means in terms of its relationship to mainstream adoption, and how that's connected with what we talked about in yesterday's live stream, which is Metcalfe's law. And so that's going to be really interesting for us to see how that increase in user relationship is going to be growing, how this increase in Bitcoin futures is going to be affecting Bitcoin, is going to be affecting all the Bitcoin and cryptocurrency blockchain industry, and it's going to be really, really exciting. So with that being said, let's pop into the chat, let's look into the market, take a peek at the news, and let's discuss. So I think in the chat box we have our links to our Patreon page, and we have links to our Discord page. So feel free to check those out. We currently have 2 patrons who we are really, really excited about, and we have other people, 2 patrons through Patreon. We have other patrons as well, but we also have access to our Discord channel, so feel free to pop into our Discord and see what's happening in there, take a peek at the conversation, help contribute your ideas, your thoughts in terms of what we're going to be talking about in the show, what sort of news you're interested in hearing about and having us look into, and people sharing some interesting information already, and it's just an additional place where you can be part of a community that we're building from our position in the blockchain industry, just to help support all the new people and the flood of new people that we are seeing now enter the market, and we're not even at the beginning of this yet. So feel free to check out that Discord link. Feel free to check out, what else? The Patreon page. And before we get into the market, has anyone here seen Saturday Night Live the night before? I'm not sure if you're going to be able to hear this.
People in America are good people, and eventually, good people will fix our country.
Okay, good. But just in case, I'm putting all my money in Bitcoin.
So that was Saturday Night Live just 2 days ago, giving a shout out to Bitcoin in the opening scene of Saturday Night Live. And so I thought that, they gave a shout out to Bitcoin. I was really excited that someone already had this clip up on Reddit. And so this might be something interesting to share if you like Saturday Night Live, if you want to help spread awareness, even when you're hearing about it more and more on TV shows, more and more, we just heard about it on The Big Bang Theory. Last night it was on Saturday Night Live. It's been on Mr. Robot for a long time, of course. More and more TV shows are talking about it. More and more of the mainstream media is talking about it. It's starting to come up higher and higher on the feeds of people who aren't clicking on these topics every day. And this is just a sign of the things to come. So turning over to the market cap, I want to take a quick peek, see where we're at today. We're quickly approaching upon $500 billion, currently $0.444 trillion, $444 billion. Bitcoin dominance has been increasing once again 62%. So where are we? We're almost, this is going to, how long until this market cap of Bitcoin is going to be 300 billion, 400 billion, a trillion? These numbers are just, how could they do anything but increase as we see so much news, so much additional money, so many additional entry points for capital to enter the blockchain ecosystem, for people's attention to be drawn into Bitcoin. And which token, which blockchain is everyone talking about after a year or years of the mainstream media saying Bitcoin is a fraud, Bitcoin is a scam, it's all about the blockchain technology. The blockchain technology that everybody is interested in is Bitcoin. The blockchain technology that everybody knows about is Bitcoin. And while some people are also hearing about Ethereum and are also hearing about Litecoin and Dash and some of these other projects, it's the Bitcoin blockchain project which is bringing people in to the space. It is bringing people's capital into the space. And as more and more of that capital enters the space, they're going to become aware of how Bitcoin works, how they're going to become aware of how blockchain technology works. And at that point, they're going to become well aware, before that point, of all of these other projects, of all of the other potential from these different either tokens or blockchains altogether. And so anyone who's been invested into all the altcoins over the past couple months has seen their portfolios destroyed as the value of Bitcoin has hyper increased over the past couple months, leading into this, at the time, breaking news, this news about the futures that we're going to be talking about. That news only came out 4 weeks ago, 6 weeks ago or so. The CME continuously said that they weren't going to be working on it. And then when they said that they were working on it, they said it, wasn't going to be coming out anytime soon. And then all of a sudden they said it's going to be released by the end of the year. And then, that's additional attention, additional capital. And it's going to be amazing to see how much additional capital rolls into Bitcoin in 2018. We're seeing so many predictions about the price of Bitcoin reaching well past the $27,000 that was predicted, over $40,000 that's been predicted, $50,000, $100,000. And the fact of the matter is that it doesn't matter how you slice it or dice it or what words you want to use to describe the Bitcoin situation, the sky is technically not the limit, because the demand of Bitcoin could be limitless, especially in a hyperbolic situation where there is extreme differences between the exchange rate of Bitcoin and the US dollar. Bitcoin could go beyond $1 million. And so if there's no ceiling to how high Bitcoin could go, and the cap to the total number of Bitcoins is currently only 16.7 million Bitcoins that exist, and we know some of those are inaccessible for a variety of reasons. There's only so many Bitcoins being bought and sold in the different trading platforms, in the exchanges, and this is what's putting pressure on this price. This is why everyone is predicting that this is going to be going up. And what we're not seeing is that we're not seeing the volatility that we were expecting. We're seeing a little bit of volatility, but we're not seeing the extreme volatility that some people were possibly expecting with the Bitcoin futures. And that's the reason, is because if you think about who's in the Bitcoin futures game, it's not even just wealthy people. It takes you have to have special permission. You have to have super special accounts to get into the Bitcoin futures. And when you get into the Bitcoin futures, you have to have a significant amount of money, and that amount of money is when you're dealing with an asset that you don't understand very well, is a huge amount of risk because of the lack of knowledge. And so the people that do understand Bitcoin, they understand that it's probably a bad idea to short the market, right? And that's an understatement, that it's a bad idea to short the Bitcoin market. There's reasons that miners would want to short the market to hedge their operations, but for someone to short Bitcoin who's not actually holding Bitcoin is really risky. And so what we're seeing is that while a lot of people are willing to bet that the future price of Bitcoin is going to be very, very high, there currently aren't very many participants that want to short Bitcoin, although there are some. And so in the past couple days here, Bitcoin price has fluctuated between, let's say, about $13,000 and $17,000 over here in coinmarketcap.com. So that's a lot in terms of short-term swings and the volatility. It's not a lot in terms of the big picture of things. Quick side note. I think it'd be really interesting if people start referring to Bitcoins and start looking at Bitcoins in terms of the millibit. This is something that we had talked about yesterday when we showed the Instagram photo from before. But this is a millibit, right? So when you look at the price of Bitcoin, for those that aren't aware, the current price of Bitcoin is $16,600. And so what that means is that a millibit would be $16. And so if we start thinking about Bitcoin in terms of millibits, so if one millibit is $16, when Bitcoin hits $20,000 of Bitcoin, then we're going to replace this with a $20 bill. When it's $20,000 of Bitcoin, then one millibit is going to be worth 20 bucks. And so then if you had 5 millibits, someone could say, hey, so this is worth 5 millibits. And that, you know, say you went out to like a nice dinner and Bitcoin was $20,000 of Bitcoin, you know, that nice dinner might be 80 bucks, maybe 100 bucks. And so that'd be 4 or 5 millibits, you know, depending on how you do with that tip and the transaction fees. We won't get into that. But just think about money in terms of millibits. Think about, you know, the lower denominations, because $16,000 is a lot for one Bitcoin. And one of the aspects of Bitcoin and blockchain technology that all of the newcomers are going to have to understand, because they don't understand that at first, is that you can divide a Bitcoin into 1 million different pieces, 8 decimal places down. They're not used to that because they're not used to being able to divide stocks in their head. They're not used to thinking that they can have a half a stock or 1/millionth of a piece of stock. If they want more stocks in the traditional financial world, they just issue more stocks, and that dilutes the value of everyone else unless you have a special clause that says that your share of the stock isn't diluted. And if you have a special clause that says your share of the stock isn't going to get diluted, the only way that that would work is if some of the new issues were given to you so that the total amount of stock that you had would increase, but your percentage of the total company would stay the same. So, you know, if that's confusing, maybe that's because you're used to blockchain technology and you're used to understanding that the single unit is, you know, divisible. But the point is that newcomers who are used to stocks, newcomers who are used to gold, it's not always clear that the Bitcoin is divisible because everyone is so focused on whole Bitcoins. And as a human condition, fractions are not what human beings like to think about. Human beings do not want a half of an apple, they want a whole apple. They don't want a half a pie, they want the whole pie. And sometimes they want to have the cake and they want to eat it too. But in terms of the investing, in terms of holding and HODLing, the different types of blockchain technology, the different tokens that are out there, when the price per Bitcoin is over $16,000, over $10,000, over $100,000, you know, and I'm sure by that point people will be closer to recognizing this, but we want to help them today that the millibit is a denomination to think about. So this was a really cool video.
Back from the dead.
This is how you HODL. This guy's HODLing. This guy's HODLing. Okay, so real quick, before we talk about the Bitcoin futures, before we get into everything that's been happening with that, of which we already touched upon, just wanted to touch with this article that we see in the CNBC.com with a cryptocurrency expert, or not a cryptocurrency expert, but a currency expert that says there's one fundamental reason behind Bitcoin's runaway rally. Let me try that again. So turning to this article at CNBC.com, there's a currency expert who says there's one fundamental reason behind Bitcoin's runaway rally. And so we have Valentin Marinov, who says that it's the inherent imbalance between the demand and supply. And so this is what we were talking about earlier. There's only so much Bitcoin. There's currently 16.7 million Bitcoins. And the demand is not even at 1% of the world's population. It's less than 1% of the world's population, less than 1% of the world's, currency, money supply, and the sky is the limit. So cryptocurrency scarcity and that value of the scarcity is a primary reason for the staying power, is a primary reason why even if people say Bitcoin is dead, people are still going to hold on to Bitcoin. If Bitcoin was to crash from $16,000 to $500 or even $1, it would not, people would of course buy it. People would of course, they would not sell it. That would be crazy. It's just there's too much emotional connection, too much tangible connection, unless there was a fundamental, disability or destruction of the blockchain and the security or the trust. People would refuse to sell Bitcoin at almost any price in terms of the core supporters of the technology. And even with that price drop down, people would still, then purchase it as seeing as a level of opportunity. If someone had the opportunity, if you had the opportunity to purchase 1 million Bitcoins, the Bitcoin price crashed and everyone said Bitcoin was dead, and you had the opportunity to purchase 1 million of them, would you? And there's a lot of people who would. And so that alone provides the value, because if everybody wanted 1 million of them, if there's still that level of demand, then that is going to keep the price up because the supply is limited. And so while that's the case, we still have a lot of people who are saying that, to stay away from it, saying that it's a mirage, saying that it's a fraud. People like Warren Buffett, people like Jamie Dimon at JP Chase. And so there's on one hand, there's this imbalance between the supply and demand, and on the demand side, there's just this unwavering hope, this unwavering faith, this unwavering knowledge that the digital currency's value is going to go up, that the trust and the security will be maintained, that the issues that plague Bitcoin and Bitcoin's blockchain now will be resolved, and holders of the primary level protocol, in the case of Bitcoin, Bitcoin BTC, and in the case of Ethereum, Ethereum ETH, they're going to be the ones who will have the most rewards, as people down the line, decades down the line, will be primarily focused with the tokenization of the secondary levels of this blockchain technology. So in terms of the futures, so let's start talking about the futures. So the futures and the Bitcoin futures are derivatives. And so what's a derivative? A derivative is a debt. And so when someone says they're talking about futures, which is a very big word in finance, it is a megalithic sort of concept, because our entire world, our entire society, all business structure, all money supply, all structure of money and regulation is all built on the concept of futures contracts and forwards contracts. And so none of this is financial advice, just to make sure that's said out there. But this is just some educational information. Please check all of my facts, check out, your sources, and don't make any investment decisions based on any of this. But so when someone is talking about futures, they're talking about debt. When someone is talking about a derivative, they're talking about debt. And so futures are derivatives. And what this means, it's a financial instrument, and it obligates a trader, and that could be you, it could be, whoever is the trader, to either buy or sell an asset. And they have to buy or sell this asset at a specific time and at a specific price. And that's very, very important, because you're not buying or selling that trade based on today's price, because that's just normal trading. This is a derivative. This is you're making a debt. You're giving up money to say that you're going to buy or sell this at a future price. And so the way the futures derivatives work at the CME and the other places like the CBOE and what will be the New York Stock Exchange when they release their Bitcoin futures as well, or any place that really has futures, because like the CME, for example, they've been in the futures industry for a long, long time, and they've been creating futures contracts for a long, long time, not necessarily for institutional investors to create incredible amounts of wealth, but really to help the market in terms of the producers to hedge against the potential of losses that could exist in markets that originally required futures, such as food, water, things like that. There's oil futures, all sorts of futures, and now there's this crazy Bitcoin futures just so these people can make some money and hopefully try to stabilize the price. So that is with the futures. A lot of people saying staying away from it. Again, Warren Buffett, Jamie Dimon. It's really interesting that Warren Buffett says stay away from it. I really thought that he would see the value and see the potential based on his understanding of the market. So it's really interesting. I wonder if he really doesn't understand Bitcoin, or I wonder if he is encouraging people to stay away from it because he understands the negative effects that would have for the rest of his portfolio. I guess we really won't know, what his intentions are since we're not in his business circle, but just something to think about. He could be secretly hedging himself. He could be secretly shorting himself. And yeah, I mean, why not, right? So this currency expert goes on to say that the reason why there's so much concern around Bitcoin is because of the high volatility levels. And it's also the clear lack of support from either central banks or international regulators. And so what this means, the reason this is highlighted, is that this is information that you want to be aware of. These are clues that you want to pay attention to. Whenever someone is talking about the high volatility levels of Bitcoin or blockchain technology, if there's an extreme shift with the volatility going down, that can be used against Bitcoin and blockchain technology. It can be used to implement different types of regulation. Just as if if there's a big incident in the world, that can sort of rally people's attention and rally lawmakers to create different laws. And so the volatility inside the Bitcoin, the volatility in the markets, is used as a bad word. But in terms of the financial traders, in terms of the people who are buying and selling, these guys, they're looking for the volatility. They want the volatility. They want these huge swings up and these huge swings down, because that's how they make all of their money. And so volatility is a really good thing if you're looking to make money. And then volatility can also be used against the market if it's if that's the desire, if that's the intent. And so then it's also interesting, with a clear lack of support from either central banks or international regulators, we know that there's more and more interest in regulating the technology and trying to figure out how do you take the existing technology that has now been created with blockchain and Bitcoin, and how do you fit it into the box of the existing laws and regulations when this doesn't quite fit into any of those different boxes, right? It just the same tools can't be used that we're used to in the traditional sort of environment that was created and that people have been living in for the past 120 years or so. So this brings us to Metcalfe's law. So we were talking about Metcalfe's law in yesterday's show. And so just a review, Metcalfe's law states that the value of a telecommunications network is proportional to the square of the number of connected users of that system. So it's N2. And if we go, we can check this out a little bit more at Wikipedia. Metcalfe's law has been used to help define the value of different telecommunications networks like telephones and faxes. You probably heard it in relationship to them. And for example, in the telephone example here, you can see if you have two telephones, Actually, you can't see that. If you have 2 telephones, then you can only make 2 different connections. And if you have 5 telephones, then you can make 10 different connections. And if you have 12 telephones, then you can make 66 connections. And so the value of the network in total is completely dependent on the total number of users who are using that network. And so in terms of the Metcalfe's law and Bitcoin, a lot of people we know are using this equation to help them understand if the price of Bitcoin is going to go up or if the price of Bitcoin is going to go down. They're using Metcalfe's law while also looking at the hashing rate and the amount of hashing power that's going into Bitcoin toward Bitcoin. And so what does this mean? And so the interesting aspect about Bitcoin and blockchain technology that I want to bring to your attention is that if you have telephones or if you have Facebook users, then the total number of telephones or the total number of Facebook users is practically infinite in terms of the total supply of the society. You know, you can say 100% equals infinity. And so with the Bitcoin and you know, with the blockchain technology, I suppose you could have infinity users using the Bitcoin and the blockchain technology, but you don't have infinity supply of the amount of Bitcoin that actually exists. And so if you're someone that wants to try to calculate Metcalfe's law for Bitcoin and you want to figure out, you know, what are the total number of users so you can square that for the value of the system, you have to figure out how do you calculate the total number of users. And is the total number of users the total number of Bitcoin addresses? Is it the total number of Bitcoin addresses that have 0.1 Bitcoin? Is it the total number of Bitcoin addresses that have 0.1 Bitcoin divided by the number of transactions that's been taken in a period of time? And so the reason why I'm sort of jamming about these sort of ideas is because I just wonder, is Metcalfe's law actually liberal in its valuation of Bitcoin? And so I wonder if it's the opposite of the limitations. So in terms of the limitations of Metcalfe's law in social networks, if a user joins later and they later use the network, and they use a network less than the early adopters, they're joining later and they're less active on the social network, then the benefit of the additional users may lessen, making the overall network effect less efficient if it costs, you know, per users are fixed. And so the cost per users isn't necessarily fixed with Bitcoin because, again, this total supply creates different market dynamics. And so this is something I'm really interested in talking more about. This is something I'm really interested in. And if this interests you at all, then I encourage you to come to our Discord channel and start talking about this, because I want to see if we can actually work on our own equation and see if we can find some equations that are out there, and just see if we can have our own little predictive analysis of how we can sort of predict, you know, or just validate our predictions after they happen with Bitcoin. So turning over, let's check out the chat, see what's happening in chat. So we got lots of people in here. Hey, everybody. A lot of people. Hello, hello, hello. Looks good, fine. Keep or sell BTC, we can't say. Personal decisions. Don't lose money you can't afford to lose. You definitely need to pay the rent. You definitely need to feed the kids. I mean, we don't have a lot of Bitcoin at all. You know, just having 5 kids to feed and yeah, having to keep the lights on and pay all the bills. There's, you know, life is real. Keep or sell, keep or sell. Yeah, I'm a long-term hodler. Personally, I think a lot of viewers of this channel are long-term hodlers. Litecoin will go down because it will go. Litecoin will go down. I think Litecoin's going to continue to go up. We were talking about Litecoin in yesterday's show. Remember how we were talking about the percentage, if you were here? And if you weren't here, the percentage of Litecoin to Bitcoin. So right now, Litecoin is let's round it and say 1.2%. So I would be happy to see Litecoin go over 1.5%. If Litecoin went over 1.5% that of Bitcoin, if the per Litecoin price to Bitcoin was 0.015, then, or you could say 15 millibytes, then I think that would be almost an all-time high for Litecoin, or that would be definitely a healthy price for Litecoin. When everyone's talking about the Litecoin price being at an all-time high, and you guys are looking at it in USD, it's definitely not an all-time high. This is not an all-time high, because for me, for it to be an all-time high, the price per Litecoin again would have to be over 15 millibytes for that to be the case. Seeing what's out here in the chats. So no change in the market cap when there are futures. Yes, but the buy orders and the sell orders can affect the price of Bitcoin, because if you have deep pockets in the futures and you want your position to last, then, you know, I mean, money can swing in any sort of direction. I mean, indirectly, that's why people are so skeptical over the futures, is because money can still enter the market cap in other ways. And so I would agree with Dr. Crypto. It's indirect for sure. It's being normalized, and there's a lot of tricky Jedi things that could be happening from a lot of people with a lot of money. Yeah, I have no idea about corrections and all that. We're not traders. We don't have any trading advice. Sorry about that. I definitely think a correction is possible. There can always be a correction. There can always be a huge swing of money that can come out of the market. I mean, no one ever knows. That's just the thing, is that someone could just have a huge position in Bitcoin, and they can just drop the market and totally destroy a lot of people's positions. And, you know, if you're a good trader, I suppose you have all of your bets hedged and you have your risk properly managed. But you just have to recognize that in terms of corrections, if anyone was to just pull out a ton of their, you know, money out of Bitcoin, then you know, people would call that a correction. You know, when it could just be market manipulation. You don't even know. And I would call that almost market manipulation, because someone's probably going to act on that information if they're going to make that large of a move. That's going to cause chaos, and chaos is a ladder for opportunity. And long term, you know, in that sort of chaos and if that sort of correction with the market going down, long term, that market, and even short term, medium term, that market's just going to shoot right back up. And so, you know, could there be a correction? I mean, what does that mean? I mean, the price could always drop long term. I would guess the price is going to go up. Yeah, a lot of people want to talk about NYSE. Yeah, NYSE got hacked. It wasn't good for them. We've used NYSE in the past. Don't know what else to say about that. Yeah, hit that like button. Thank you very much. We are on STEEMIT, at Gary Palmer Jr., at Minting Coins. Cool. All right, so turning back over to some news. We have this article coming out of Cointelegraph.com with some information and some quotes from the New York Stock Exchange chairman. And he's voicing regrets for not launching Bitcoin futures trading first. And I have to say, this is super surprising. I almost wonder, again, if they intentionally didn't do it first, but it seems as if the New York Stock Exchange is really super involved in Bitcoin and blockchain technology since 2011. The New York Stock Exchange owns the Digital Currency Group, owns, what else? The Digital Currency Group, it owns CoinDesk, it owns Grayscale, it owns the XBTC, it owns the Ethereum Classic, ETC. I mean, indirectly, the New York Stock Exchange and the Digital Currency Group own a ton of businesses in the Bitcoin and blockchain industry. And so with as much foresight and as much connection as they have, I'm surprised that they're not leading the way in every single aspect of the future. But maybe again that's by design, and we just can't be sure if they intentionally didn't want to be first, or if they're just saying that they feel silly, right? Maybe they just wanted someone else to walk into the dragon's den first, and then they can learn from their mistakes, as the New York Stock Exchange and a lot of these different companies are really building up the number of patents they have, and the amount of people that they have in the space, the different systems that they're developing, the processes that they're developing and implementing to support the people and the systems. It's this entire infrastructure of operations that these companies are creating, and the New York Stock Exchange is really leading the space in terms of being the bridge between the traditional financial world and this new Bitcoin and blockchain technology world. So he said that he and his exchange were fools for letting their competitors beat them to the launch of the Bitcoin futures trading. So the New York Stock Exchange rivals have been launching these Bitcoin futures trading, and as some of you guys out there are aware and are interested in the future stuff and how it's affecting Bitcoin, we have the Chicago Board Options Exchange, the CBOE, and we also have the Chicago Mercantile Exchange, the CME Group, and they're both scheduled to launch in December. And in fact, the CBOE beat the CME to the punch, even though I would say that the CME Group is the stronger organization in terms of the stronger background and experience in terms of futures contracts, futures derivatives for as long as they've been doing it. I'm not sure if it's been like 200 years or something. It's an incredible amount of time. And so the CBOE actually introduced its offerings December 10th, yesterday, and the first full day of trading is actually Monday, December 11th, which is right now while we're shooting this video. And so meanwhile, the CME Group is scheduled to launch their Bitcoin futures on December 18th. So mark your calendars, December 18th, we're talking 1 week from today, the CME Group is going to be launching their Bitcoin futures product, their financial instrument that they're going to be offering through their exchange. And so it's going to be two different exchanges offering these Bitcoin futures trading. And then I'm sure we can expect to see the New York Stock Exchange post after them. And so again, a lot of people are just talking about the volatility and how the volatility is tied to uncertainty, but the volatility and uncertainty is how traders and a lot of these financial institutions make a lot of money. And overall, I think that the mainstream people who are getting involved in the space, the small mom pop folks who, don't have the ability to purchase these, at this level now gigantic quantities of Bitcoin, these developments show that Bitcoin and other digital currencies are slowly but surely entering the mainstream financial sector. The balance of the financial power is gradually shifting, exponentially gradually shifting, away from the historic institutionalized environment, and is now shifting to a decentralized and much more equal system. And so rules and regulations will try to stifle the equalization of the decentralized systems, but that's not going to be in the best interests of the regulatory systems, of the regional systems that the regulators are governing over. Again, if there's too much regulation involved with the Bitcoin, involved with cryptocurrency, then that's going to push away innovation. It's going to push away adoption. It's going to push away the ability for that area to flourish with these tokens and with this technology, as the value of these tokens and the technology accelerates into the future. In the future, I would imagine that these regions, these governments, these regional institutions are going to recognize that they want to encourage Bitcoin. They want to encourage cryptocurrency and blockchain technology, blockchain adoption, blockchain integration between the different businesses, the different payment systems, the different companies at a B2B level, the different consumers with the B2C level, because the more this technology, which is going to be rapidly increasing in value, the more of it that is distributed to your specific region of the world, the stronger your region of the world is going to be in terms of its wealth, in terms of its potential, in terms of its opportunity, in terms of people's knowledge, awareness to be able to use and adopt this technology, just like being aware of Facebook and how Facebook works and Snapchat and how Snapchat works. That's adding to businesses' ROI. Businesses that understand the value of Snapchat, because while the percentage of you out there probably don't use Snapchat, and I'm actually not too heavy of a user of Snapchat, businesses need to recognize that there are multi-million numbers of people's attention and minutes focused inside that platform. People's attention focused inside different platforms. And people's attention is a currency. People's focus is a currency. And if people understand how these currencies work, they're going to be able to use these currencies more efficiently. It's going to create more innovation. It's going to create more business. It's going to, just make these regions of the world stronger. And so just the exact opposite, I would predict, would be true, that if these regions are pushing away, these tokens and this technology, then these regions are going to suffer. And so that's where the shift is happening. And nowhere is this shift more prominently displayed than it is with the traditional financial institutions, which are charging forward with these new financial instruments, which is just bringing more awareness, more attention, and putting more capital into the space. So over here at Reuters.com, we have this one headline where they're talking about the hotly anticipated Bitcoin futures, how they ease off after a 22% surge. And so they said there was an initial surge of almost 22%, trade up to 13% on Monday in the eagerly awaited U.S. market debut that backers hope will confer the greater legitimacy of the volatile cryptocurrency, which is going to lead us to wider usage, wider adoption, wider awareness, as I was talking about just a moment ago. So, so the CBOE, as we mentioned before, marked the first time that investors could get exposure to the Bitcoin market via the mainstream regulated cryptos. That happened today. And the premium so far, according to this article from Reuters, says that they've been high. And this is demonstrating that few people actually want to take the short side of the trade. Go figure, right? So that's interesting to know that few people want to take the short side of the trade, which means that few people probably want to lose money because everyone is expecting the value of Bitcoin to go up pretty rapidly. And so further in this article, this is saying at this article at Reuters that in just over 12 hours after launch, there's been 2,780 contracts that have been traded, meaning around $48.5 million vested. So this compares with a daily volume of $20 billion across all cryptocurrencies. And so this is, it's less than a drop in a bucket. To say that this was a drop in a bucket would be too kind to the things that are to come. The initial trading with the past 12 hours with 2,700 contracts, $48 million is nothing, right? $20 billion trading across all different cryptocurrencies. Let's go check where we are. Yeah, $21 billion traded, which is relatively high in the historical context of the cryptocurrency trading. But 20 billion across all cryptocurrencies is nothing. One of these hedge fund managers wants to make one trade that's just $20 billion. One hedge fund manager wants to make one trade that's $200 billion. So for the total to be $48 million is just nothing. $20 billion to a lot of these guys is still nothing. And so they're just setting up the systems that are going to be existing in the future, because this number is going to be going up. As the volatility increases, as the value of Bitcoin increases, it's just going to be more opportunity for those percentages for people to make little bits of money here and there, and for larger operations to hedge their bets. This is just nothing compared to what we expect to come. So according to this article, there's some quotes in here that say it's going to take time for the derivative volumes to build up, but eventually, if they prove to be a significant percentage of global trade, then they should, in theory, help to stabilize things. And so people are expecting that the futures markets are going to help control Bitcoin. They're expecting the futures markets are going to help stabilize Bitcoin if the futures markets prove to be a significant percentage of the global trade. And so this is your clue. Again, we like talking about clues in terms of what we're reading, what we're seeing in the content here. If the percentage of global trade is high inside the Bitcoin futures, then that's going to give the Bitcoin futures more potential to control or to manipulate the price of Bitcoin and to create opportunities and profits with the price of Bitcoin. So this article goes on to talk more about, the background of Bitcoin and all of that jazz. We are going to move on and go visit Twitter. We're going to see what Charlie Lee is talking about. And so Charlie Lee is helping us understand Bitcoin futures a little bit. Oh, I thought this was interesting. So fiat is to gold, as Lightning Network is to Bitcoin. And what Charlie Lee is saying about this is that fiat was effectively layer 2 solution for scaling gold. There was only so much gold in the world, and it was really difficult, to carry your gold everywhere. It was prone to be stolen. It was difficult to transact with it across borders. It was difficult to break it down past, its originating decimal point, although you could do it. The blacksmith fees for, breaking it into smaller units were kind of high at the time. And so the fiat, the paper version, the notes that were backed by gold, was the layer 2 solution for scaling gold. It was lighter, it was easier to use. They were able to add some fraud protection in there. And it was backed, the fiat, it was backed and settled in gold until that backing was later removed and we came off the gold standard. So unlike fiat, Lightning Network settlement to Bitcoin, according to Charlie Lee, is cryptographically secure and cannot be removed. So the layer 2 of Lightning Network is never going to be able to be manipulated or altered away from the main Bitcoin blockchain. And so apparently the developers, what we're hearing is that this Lightning Network is going to protect people inside these Lightning networks, and so that hopefully people can't get lost or imprisoned in some of these second layer protocols that, in some cases could potentially be operating with unique rules inside their own little ecosystems. So that's definitely encouraging. Back to the futures talk. Charlie Lee has some experience with futures. I guess he used to buy and sell and trade in futures before Bitcoin. Let's see here. And so he says, to help us understand about these futures derivatives, is that for those not familiar with futures, XBT settles in 2 days. And so again, we were talking about this. This isn't buying and selling and trading Bitcoin on a moment-by-moment basis like a lot of people are in the exchanges and Bologniacs and Bittrex, whatever exchanges there are out there that people are using with VPNs or not with VPNs. It's not trading in the moment. It's a future date. You're saying in 2 days from now, I'm predicting that the price is going to be such and such. And so for those not familiar with the futures, XBT settles in 2 days before the third Friday of the month. So January 2018 futures is going to settle on the January 17th, 2018 at the Gemini auction price. And so what this means is that if you're long XBT, and you think that Bitcoin is going to be higher, it's going to be more valuable in the future than it is right now, then that means that you're betting that the Gemini BTC auction price is going to be greater than, so the alligator symbols, math class, those aren't familiar with, when you're looking at these symbols, I've had a little dyslexia in the past myself, but if you're looking at these symbols and the 2 points are coming before the 1 point in the alligator symbol, then it's greater than. If it's the lesser, if it's the 1 point instead of the 2 points, then it's less than. And so if you're long XBT, then you're betting that the Gemini BTC price is going to be greater than $16,800 on January 1st or January 17th, 2018. And so that's what that means. So that's where you're betting in the future. You're betting if the price is going to be higher or lower than a given price. And then you're betting so much that you really believe or really think that the higher price is going to happen. And so what we were seeing from the Reuters article is that a lot of people are betting that the future price is going to be higher than $16,800 in the future, and there's very few who are betting that the price is going to be lower. And so if by some chance they're right, if the price on January 17th is less, if you short Bitcoin, if you're shorting it, what that means is that you think the future price of Bitcoin is going to be less than that price that they say. And yeah, I think it'd be really interesting for people to watch The Big Short just on auto repeat a couple times to understand how the shorting of the housing market worked, and how the housing market, it was always predicted that the housing market was going to be bigger. It was always predicted that the housing market was going to be better. It was never predicted that the housing market was ever going to go down dramatically. And there was a group of people that recognized that there was a fundamental flaw in the system. There was a group of people that recognized that there was something seriously wrong, and the only thing that they knew how to do was to bet like a futures derivative almost, that the future price of the housing market was going to be much less than what they were predicting. And so it turns out that they were right, that the futures of the housing market was completely destroyed. And because nobody saw that coming, and they had such good odds that of return if they were going to win the bet. Why'd they have such good odds that they were going to win the bet? That's because it was assured that they were going to lose the bet, because no one ever thought that the housing market would ever go down. And so they shorted the housing market, and they made a ton of money. And so in terms of understanding Bitcoin futures and shorting the market in terms of a future context, I think that movie's a lot of fun to check out. So this brings us over to what we're talking about with the future, what we're talking about with Metcalfe's law. And there's this post on Reddit saying 99% of all the people in the world are still not in the game, and it's greater than that. I believe it's 99.9, maybe 99.99% of the world they're still not in the game. And we're going to hit 3%, we're going to hit 1%, we're going to hit 3%, we're going to hit 5, 6. And then in a few years from now, who knows what that penetration level is going to be at. But being so early in the game, there being so much money in the world, we talked about how much money there is in the world in earlier videos. You can go check those out. But as this additional money starts coming into the space, people are going to look at these times and just recognize, at $16,000 compared to $100,000, how cheap Bitcoin really was. And so this is just really interesting to sort of look into that and look into those numbers, and to recognize, what is the upward trajectory? What is the ceiling? What is the limit that Bitcoin could potentially reach? And so let's see what this post says. This says, at a time when some experts are warning that the Bitcoin bubble is going to collapse at any second, we have Ronnie Moas of Standpoint Research that said there's plenty of room for a cryptocurrency to keep rising, and he's still buying. And so, again, we just keep on hearing this story over and over again. A lot of people say that there's a bubble. A lot of people say it's going to burst. We keep on seeing these short corrections. Then we see these short corrections followed by people immediately buying up what was sold just taking money from the person who is selling high, who's getting scared, who has a weak hand. So if you're not a trader, you shouldn't be trading. And if you are trading, then you should probably know not to sell just because the market dips, to sort of do your research and to definitely make your own financial decisions. In terms of the total number of people using Bitcoin and blockchain technology, there's this post on Reddit, and there's this archive page where people were talking about the Arab world getting into Bitcoin. We haven't seen a lot of news come out of the Arab world outside of all of the innovations that are happening in Dubai specifically. But in Saudi Arabia, the most prominent newspaper is listing the Bitcoin prices among gold and crude oil at the top of the economy page. And so that's a huge number of people in the world with a significant amount of resources, let alone gold and capital, dollars, oil, all sorts of assets and money that they're now recognizing the value and probably learning about the future potential of the Bitcoin and blockchain technology. There's this one comment that was posted here that said that clerics are letting people know that trading crypto is completely fine according to Islam. And so it's just really interesting. I guess I haven't thought about religious leaders talking about Bitcoin and, and having that sort of level of encouragement of people hearing about it at Sunday church. So, yeah, I suppose if anyone hears about this at Sunday church, let us know. Public service announcement, just to help you guys understand what's out there. If you want to be playing with some of the websites, interacting with some of the websites in the world, it's good to have MetaMask installed. If you go to your Chrome browser and you can go to your Chrome extensions and you can type in MetaMask right up here, and MetaMask should pop up. You want to make sure that it says metamask.io, https, : metamask.io. There was a time when there were a couple of these. There's a plugin pretending to be MetaMask. There were two of them, and one of them was a knockoff of the other one. So you want to be really careful if you do see two different MetaMask options that you just want to add just the one. You want to make sure you're adding the right one to your website or to your browser. So let's go check out the chat, see what's happening over there. Scott says the price shall never drop. I think it might go down and up because that's what a market is. That's what a market does. But I know what you mean. Wiggle its way to the moon. That's right. Rough to play. About the Bitcoin futures is pushing Bitcoin in the right direction, bringing more awareness, more attention. It's amazing, we run a Bitcoin meetup group, and it's amazing how many people are getting, becoming aware of Bitcoin, who are interested in Bitcoin, and they don't own a wallet, they don't own any amount of Bitcoin. There's this lag, there's this delta between people's awareness of the technology when they start learning about it, and when they get their first Bitcoin wallet, when they make their first Bitcoin transaction. It'd be great if we can speed up that time and increase that delta so people can accelerate how long, the time from they learn about Bitcoin to when they have their wallet. Absolutely agree with Scott. This is the beginning of the powers that be flip-flopping on the BTC. This was in The Economist magazine 30 years ago. They said that 2018 was going to be the year of the digital currency. Somehow they got that right. And it doesn't matter what your views on a conspiracy theory are. Bitcoin is definitely the wave of the future. And it's probably going to be better to have some Bitcoin now as opposed to trying to get some Bitcoin in the future. Because, I don't know. I think people have different feelings about their associations with different people and different ideas, different concepts out there. And I guess relating Bitcoin to money, a lot of people think, or a lot of people say the old axiom that money is the root to all evil. And I really question that. I really don't think personally, I don't subscribe to the idea or the belief or the affirmation that it's true. I think that money is the, you know, energy. I think that money is energy. Money is intent. Money is just extending, you know, you as a human being toward what it is that, you know, your desire is in the world. And so money can't be the root to all evil when money is being used for so many good things in the world, when money is being used for, you know, making so many good things happen all around us. And so I think it's a huge disservice to money. I think it's a huge disservice to yourself and to your family when you think about money and one hand you say it's the root to all evil, and then the other hand you try to say, you know, that you would like to have a lot of it. And so I think it's important to recognize that, you know, money is an extension of who you are. Money is an extension of all the good things or bad things that can happen based on how, you know, you see the world and what you want to happen to the world. But if you see money as something that's bad or evil or dangerous, then, you know, energetically, subconsciously, you know, if you will, you're pushing away money, you're pushing away wealth, you're pushing away the potential for you to obtain, you know, your dreams, because you're saying that the thing that you want, the thing that you need is something that you are, you know, placing as like a vile sort of concept, a vile sort of thing. So why would money flow into you? Why would money flow into your life if you have all of these negative thoughts and opinions and feelings about money? And so I think the same thing could be said about, you know, Bitcoin. And if Bitcoin, you know, was nefarious, or if money was nefarious, I mean, the US dollar hasn't been serving everybody really well, but that's the monetary policy behind the money. It isn't the money itself. And so I think it's important to recognize, you know, the smoke and mirrors. I think it's important to recognize, you know, things that are happening behind the curtain. And it's really difficult for us to tune into what's happening behind the curtain because we don't see the curtain. The curtain's invisible. There's not actually a curtain there for us to be aware of, right? It's not so obvious as it was in The Wizard of Oz. Yeah, and so that was a little bit of soapbox rant about that. Wow, 3 years after buying crypto, Dr. Crypto. If a meme was known by any other name, would it still be just as great? Yeah, the fact that you can purchase millibits of Bitcoin, yeah, it'd be lowercase m, capital BTC. The saying is, the love for money is the root, not money. The love for money. Okay. Yeah, I can see that. Sounds like a rich person came up with that saying anyways. Yeah, maybe. You know, it's like that old school communism, celebrating the worker and the labor of the worker, you know, just taking away from, you know, the society and giving to the state. It's like Monopoly. You've ever learned about the game of Monopoly? Go learn about Monopoly. Go look up Rule 13. I think it's Rule 13. Did we post that Monopoly piece? Nope. Go check out for that Monopoly. I don't know if we posted that. Give me a second to go check. Where was that? Maybe it wasn't here. Monopoly. Looking for a meme. Looking for a meme. I'm looking for a meme. Maybe I didn't post it. Oh, rule 11. Rule 11, oops. So this is rule 11 for Monopoly. So the rule 11 is, what if the bank runs out of money? So, and this is exactly how the Federal Reserve Bank works. And so originally the game Monopoly, go check it out on Wikipedia. I don't want to get all into it, but the game Monopoly was a socialist game to teach people about the risks of 100% extreme capitalism. There's definitely benefits to capitalism, just like there's benefits to socialism. That's what Social Security is. That's what, a lot of, or any, insurance really is. But 100% socialism or 100% capitalism can be very dangerous, as we've seen throughout history and in current events as well. But Rule 11 in Monopoly is that, what if the bank runs out of money? So some players think that the bank is bankrupt, that it runs out of money. But the bank never goes bankrupt. To continue playing, you simply use slips of paper to keep track of each player's balance and their banking transactions. You just have a centralized ledger that the bank controls. And you just keep these notes on just normal pieces of paper until the bank has enough money to operate again. The banker, this is an interesting note, the banker may also issue new money on slips of ordinary paper that isn't actually money at all. It's just pieces of paper that says it's money. And so the bank in the game of Monopoly can do that, and the bank in the game of life can also do that. So that's super interesting. So yeah, feel free to check us out on Patreon. We're patreon.com/mintingcoins. We're really looking to grow to 500 patrons, and really looking to expand our operations to really connect with more people and give more people this information about Bitcoin and blockchain technology. This has been a lot of fun experimenting with the live shows and trying to figure out how we're going to incorporate the live shows into our day-to-day moving forward. Let's go check out the chat, see what's happening over there. Any thoughts on PIVX? So we have Joe asking about PIVX. Checking out what's going on over here. Yeah, PIVX was is a great technology. I sort of was really, really excited about PIVX, and then I sort of backed away from it a little bit, and then I got really excited about PIVX as we started kicking up our interest in proof of stake and secure nodes and master nodes and stuff like that. So obviously PIVX is creates a huge opportunity for people to stake their coins, being 100% proof of stake, being private, instant, verifiable. But the technology was just hitting a bunch of bumps, and the technology was not working the way it was supposed to be working, and it was causing a little bit of frustrations, And so what I really like about PIVX is that PIVX has an extremely strong community, and the way that I look at the situation is that the community is almost more important than the technology. And so I think the PIVX technology is strong. I think the PIVX technology has huge potential. I think the PIVX technology is going to be, one of the technologies that a lot of people are using in the future, for sure. With that being said, I think that Decred is sort of a competitor of PIVX, and I think Decred has also a strong community, but it also has a stronger connection with Bitcoin, and Decred has a stronger connection with Litecoin. And Decred is sort of like a version of Bitcoin that it has these different improvements to it. But it just has a strong community. It has strong people working on the technology. It has strong connections in the relationship in the industry, and then it also has that limited supply, which really adds a lot of value to the monetary policy that's happening there. So with PIVX, I think the inflation is, how would they say it? I think that they would say that their inflation rate is 0, because even though new coins are being generated for PIVX, the amount of new coins that are generated in PIVX is supposed to be offset by the transaction fees of sending and receiving transactions. Those transaction fees, my understanding is that they get burnt and they go away. And so because there's coin that's being burnt, like in Ethereum, they're have a mechanism for creating a new supply in the ecosystem. So PIVX is cool, Decred is cool. If I guess I'm a little biased simply because we have positions in Zencash and Particle. And so we think Zencash is really interesting with their secure nodes. We think a lot of people have been signing up for those secure nodes, and that's definitely decreasing the amount of rewards that those secure nodes are going to be generating. But at the same time, the entire industry is going to grow, and the value of those, the Zen is going to grow as well. The community behind Zen is very strong. The technology, the team behind Zen is very strong. The extended community inside Zen is pretty awesome, and we've connected with some amazing people who are inside our Discord channel, and like we have people in our Discord channel who are helping people set up Zen nodes, even though that makes each of our Zen nodes worth less. We're still out there helping people get involved in technology, helping people set up secure nodes, helping everybody, so everybody can be minting coins. So anyone that's tuned in lately, yeah, we're doing a live stream today, second live stream that we've been able to do with our YouTube station. Come check us out on YouTube. We are youtube.com/mintingcoins. You can also check us out at Patreon, patreon.com/mintingcoins. We're almost everywhere at /mintingcoins. Come check us out. We're looking to build this community, have a conversation, talk about the news, talk about the Bitcoin to blockchain news, talk about ICO reviews, and sprinkle in some interviews as well to help share information with you and the macro of what's happening inside the Bitcoin space, the blockchain industry, and then also digging into the details, touching upon these fine points, and then connecting them so we can understand how all these things relate in the larger context. Understand how do we look at the information that we're receiving and interpret that information to sort of have clues in terms of the direction of where things could go, or at least some sort of insight about where we've come from. And so if you're receiving any sort of value, if we're doing halfway decent of a job, feel free to tap that like button on this live video. We're going to be making this video not public after the fact, and then cutting up this video into smaller clips. And what else? Cutting these videos into small clips for our users, and just looking to have fun playing with the live stream, and then seeing if we can use the live stream to then create our content to cut shorter videos. We're going to see how that goes. Cool. So turning over, you're welcome, Joe. It's like awesome. It's so awesome to see like everybody on the chat and the live stream. This is really exciting. So just thank you everyone that's in the room. I love all of you guys. I really appreciate you spending some time with me. So in other news from Coindesk.com, we have this one article here, brand new today, that's talking about the Parity wallet blog and how Parity is urging a rescue fork to reclaim the millions and millions of dollars in the ether that is frozen with the Parity wallet hack. And so in this new blog post just published today, the UK-based company is going into the research of what happened and then going into the possible solutions of how it can reclaim the Ethereum that has been lost with the Parity multi-sig wallet hack. And so at the time that this happened, there's about $160 million worth in Ether cryptocurrency, and not just Ether cryptocurrency, but other cryptos as well. ERC20 tokens that were connected to those multi-sig wallets. A lot of companies affected, a lot of people affected, a lot of projects affected, and just a huge problem, a huge concern, a huge amount of resources tied up in the space that is just 100% completely, utterly inaccessible. And so while acknowledging that a decision to hard fork the Ethereum blockchain would ultimately be up to the community, Parity said that a preferred fix would be made via protocol changes to the Ethereum virtual machine, the EMV. According to this blog post, this would be a functional enhancement of the platform that would both restore the lost funds and protect from similar cases in the future. And so the Parity wallet, they're quoted here as saying, no one should be under any illusion that unlocking these stuck funds would be anything other than a rescue operation, because there's no way they're going to get these funds. These funds are gone, locked up, sitting behind this piece of glass that they simply cannot touch. The ability to access these funds is gone. The funds are actually right there. The funds actually aren't gone, but the ability to access these funds is completely gone. You go to take the key and you go to unlock the door, and there's no keyhole on the door practically. It's crazy. So speaking at the time, other people have talked about this, and this idea has been criticized by the Ethereum developer Nick Johnson, who said it would change an important invariant in the EMV, potentially leading to unexpected bugs in future contracts and also even in the already deployed contracts of the world. And so this invariant that Parity wants to change is just so important that if Parity was to change this invariant, according to Nick Johnson, this would just have future potentially devastating and critical consequences that can just come from all sorts of contracts, seen and unseen. And so some developers are against almost every single one of these options that are being presented, as you can imagine, because a hard fork in any sort of scenario is extremely contentious. So the Parity blog concludes at the very end that their hope is that the community would get behind a rescue of these funds to help all the users that they can, because Parity really wants to get these funds and just have some sort of glimmer of redemption after having this shoddy code that put all of these people's funds at risk. I mean, this is not a good event that has happened to the cryptocurrency community and to the Ethereum community in particular. This is probably, the single worst event since the DAO hack, which led to the split from Ethereum Classic into this new variant of Ethereum Classic known as Ethereum ETH. So if we wanted to go from coindesk.com and go to the paritytech.io website, we can go see this blog specifically on the classes of stuck ether and potential solutions. They go into the brief history of what happened, and you can go check all of this out, comparing this to some of the similarities of the DAO incident and what happened. And so what they go on to say from there is that there is a solution, but with this solution, a solution comes with a lot of risk. And so they go through some of these solutions, the first solution, the second solution, the third solution. They talk about ideas that were put forward via Vitalik in the EIP 156, and then other solutions as well in terms of like hard forking the situation. We're not going to go over this blog post. You can come over here and check this out if you're interested. But the long and short of it is that if you wanted to get involved with what these guys are talking about and with what's happening and what people are saying in terms of the space, I recommend that even if you're not a developer, go get a GitHub account and go check out GitHub. You can go over to github.com/Ethereum, and from /Ethereum you can go click on the EIPs, and then once you're in the EIPs you can go right over to the issues. You can see all of the EIP issues of Ethereum that are in here that people are talking about in terms of the Ethereum blockchain, and then specifically you can go into the number 156 that the Parity blog is referencing, that was put forth from Vitalik Buterin, with this one sort of case of how this could help and fix things moving forward. But again, you get to see the other opinions on the matter beyond just Vitalik and some of those folks, and you can see this one person commented, speaking on behalf of Kraken, I would characterize this more as a recomps than a rescue. Recomps than a rescue. And so we did we did take on some non-insignificant losses as a result of the mentioned bug in the old Ethereum JavaScript library. At the time, losses were recovered out of the Kraken's pocket to protect our clients. We would greatly appreciate the ability to recover the funds tied up to the incorrectly computed addresses. Thank you for this proposal. Recomps. Make amends to someone for a loss as harmed, suffering, compensate. Recomps. And yeah, so that's just an interesting situation for Ethereum. Cool. So at this point, I'm thinking about wrapping up the live stream. Yep, so we have information to go over in the future for some future shows. Thinking about wrapping the live stream up. Greetings, shout out to Hawaii. Shout out to everyone out there. So where's everybody from? We have some people from Hawaii. Probably have people from everywhere. But we're going to be wrapping up this show. Thanks everyone for tuning in. Thanks everyone for showing up. Thanks everyone for hanging out, spending some time with me. Shout out to Hawaii. Shout out to Holland. Shout out to Brazil. We have people in the Big Apple, SoCal. Be safe in Southern California. Be safe in Georgia. Man, is it just crazy? We got these crazy fires in California. We have crazy snowstorms in Georgia. Yeah, just crazy weather. Yeah, so we'll be doing these live shows probably more in the future, trying to figure out how to just, make this process better in terms of creating content, doing live streams, cutting up shows, doing more interviews, just getting more news, more information, more commentary out there to help everyone understand the context of what's happening, not just how to make a buck doing trading, with the cryptocurrencies. There's a lot of people teaching everyone how to trade cryptocurrencies. There's not a lot of people talking about actually what's happening in the space, creating some sort of focus there. So we have people in Central California. We got Charlotte, North Carolina, Arizona. What's up, Violet? Good to see everybody out there. Kevin, Terry, Crypto. Cool. So until next time, not sure if we're going to be doing this again later today or tomorrow, but I recommend you come check us out at the Discord channel. We are on Discord. Link below, special invite link in the comments in the video description below. I can pop that right into the chat for some of you. You can also check us out on Patreon if you'd like. Check out some of our rewards that we have over there. And until next time, I'm glad that together we are minting coins.